He's making his investments talk. He's making his investment. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard.
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
कल ना स्कूल में मेरी पैंट फट गई थी पीछे से, तो ये है ना मेरा फ्रेंड सुमीर, वो मेरा पूरा दिन मेरा पीछे पीछे चल के वो मेरा पैंट को भी कवर कर दिया और मेरे को स्कूल से घर तक ड्रॉप किया मेरे को। ये मेरा बेस्ट फ्रेंड है।
ऐसी दोस्ती अगर एक बैंक निभाए तो IDBI बैंक ऐसा, दोस्त जैसा।
He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard.
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
कल ना स्कूल में मेरी पैंट फट गई थी पीछे से, तो ये है ना मेरा फ्रेंड सुमीर, वो मेरा पूरा दिन मेरा पीछे पीछे चल के वो मेरा पैंट को भी कवर कर दिया और मेरे को स्कूल से घर तक ड्रॉप किया मेरे को। ये मेरा बेस्ट फ्रेंड है।
ऐसी दोस्ती अगर एक बैंक निभाए तो IDBI बैंक ऐसा, दोस्त जैसा।
He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard.
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
कल ना स्कूल में मेरी पैंट फट गई थी पीछे से, तो ये है ना मेरा फ्रेंड सुमीर, वो मेरा पूरा दिन मेरा पीछे पीछे चल के वो मेरा पैंट को भी कवर कर दिया और मेरे को स्कूल से घर तक ड्रॉप किया मेरे को। ये मेरा बेस्ट फ्रेंड है।
ऐसी दोस्ती अगर एक बैंक निभाए तो आईडीबीआई बैंक, बैंक ऐसा दोस्त जैसा।
He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard.
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
कल ना स्कूल में मेरी पैंट फट गई थी पीछे से, तो ये है ना मेरा फ्रेंड सुमीर, वो मेरा पूरा दिन मेरा पीछे पीछे चल के वो मेरा पैंट को भी कवर कर दिया और मेरे को स्कूल से घर तक ड्रॉप किया मेरे को। ये मेरा बेस्ट फ्रेंड है।
ऐसी दोस्ती अगर एक बैंक निभाए तो आईडीबीआई बैंक, बैंक ऐसा दोस्त जैसा।
He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard.
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
कल ना स्कूल में मेरी पैंट फट गई थी पीछे से, तो ये है ना मेरा फ्रेंड सुमीर, वो मेरा पूरा दिन मेरा पीछे पीछे चल के वो मेरा पैंट को भी कवर कर दिया और मेरे को स्कूल से घर तक ड्रॉप किया मेरे को। ये मेरा बेस्ट फ्रेंड है।
ऐसी दोस्ती अगर एक बैंक निभाए तो आईडीबीआई बैंक, बैंक ऐसा दोस्त जैसा।
He's making his investments talk. Business Standard. He's making plans for an early retirement. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard.
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
कल ना स्कूल में मेरी पैंट फट गई थी पीछे से, तो ये है ना मेरा फ्रेंड सुमीर, वो मेरा पूरा दिन मेरा पीछे पीछे चल के वो मेरा पैंट को भी कवर कर दिया और मेरे को स्कूल से घर तक ड्रॉप किया मेरे को। ये मेरा बेस्ट फ्रेंड है।
ऐसी दोस्ती अगर एक बैंक निभाए तो आईडीबीआई बैंक, बैंक ऐसा दोस्त जैसा।
He's making his investments talk. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard.
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
कल ना स्कूल में मेरी पैंट फट गई थी पीछे से, तो ये है ना मेरा फ्रेंड सुमीर, वो मेरा पूरा दिन मेरा पीछे पीछे चल के वो मेरा पैंट को भी कवर कर दिया और मेरे को स्कूल से घर तक ड्रॉप किया मेरे को। ये मेरा बेस्ट फ्रेंड है।
ऐसी दोस्ती अगर एक बैंक निभाए तो आईडीबीआई बैंक, बैंक ऐसा दोस्त जैसा।
He's making his investments talk. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard.
बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
कल ना स्कूल में मेरी पैंट फट गई थी पीछे से, तो ये है ना मेरा फ्रेंड सुमीर, वो मेरा पूरा दिन मेरा पीछे पीछे चल के वो मेरा पैंट को भी कवर कर दिया और मेरे को स्कूल से घर तक भी स्कूल से घर तक ड्रॉप किया मेरे को। ये मेरा बेस्ट फ्रेंड है।
ऐसी दोस्ती अगर एक बैंक निभाए तो आईडीबीआई बैंक, बैंक ऐसा दोस्त जैसा।
He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard.
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
कल ना स्कूल में मेरी पैंट फट गई थी पीछे से, तो ये है ना मेरा फ्रेंड सुमीर, वो मेरा पूरा दिन मेरा पीछे पीछे चल के वो मेरा पैंट को भी कवर कर दिया और मेरे को स्कूल से घर तक ड्रॉप किया मेरे को। ये मेरा बेस्ट फ्रेंड है।
ऐसी दोस्ती अगर एक बैंक निभाए तो आईडीबीआई बैंक, बैंक ऐसा दोस्त जैसा।
He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard.
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
कल ना स्कूल में मेरी पैंट फट गई थी पीछे से, तो ये है ना मेरा फ्रेंड सुमीर, वो मेरा पूरा दिन मेरा पीछे पीछे चल के वो मेरा पैंट को भी कवर कर दिया और मेरे को स्कूल से घर तक ड्रॉप किया मेरे को। ये मेरा बेस्ट फ्रेंड है।
ऐसी दोस्ती अगर एक बैंक निभाए तो आईडीबीआई बैंक, बैंक ऐसा दोस्त जैसा।
He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard.
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
कल ना स्कूल में मेरी पैंट फट गई थी पीछे से, तो ये है ना मेरा फ्रेंड सुमीर, वो मेरा पूरा दिन मेरा पीछे पीछे चल के वो मेरा पैंट को भी कवर कर दिया और मेरे को स्कूल से घर तक ड्रॉप किया मेरे को। ये मेरा बेस्ट फ्रेंड है।
ऐसी दोस्ती अगर एक बैंक निभाए तो आईडीबीआई बैंक, बैंक ऐसा दोस्त जैसा।
He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard.
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
कल ना स्कूल में मेरी पैंट फट गई थी पीछे से, तो ये है ना मेरा फ्रेंड सुमीर, वो मेरा पूरा दिन मेरा पीछे पीछे चल के वो मेरा पैंट को भी कवर कर दिया और मेरे को स्कूल से घर तक ड्रॉप किया मेरे को। ये मेरा बेस्ट फ्रेंड है।
ऐसी दोस्ती अगर एक बैंक निभाए तो आईडीबीआई बैंक, बैंक ऐसा, दोस्त जैसा।
He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard.
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
कल ना स्कूल में मेरी पैंट फट गई थी पीछे से, तो
He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard.
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
कल ना स्कूल में मेरी पैंट फट गई थी पीछे से, तो ये है ना मेरा फ्रेंड सुमीर, वो मेरा पूरा दिन मेरा पीछे पीछे चल के वो मेरा पैंट को भी कवर कर दिया और मेरे को स्कूल से घर तक ड्रॉप किया मेरे को। ये मेरा बेस्ट फ्रेंड है।
ऐसी दोस्ती अगर एक बैंक निभाए तो आईडीबीआई बैंक, बैंक ऐसा, दोस्त जैसा।
He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard.
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
कल ना स्कूल में मेरी पैंट फट गई थी पीछे से, तो ये है ना मेरा फ्रेंड सुमीर, वो मेरा पूरा दिन मेरा पीछे पीछे चल के वो मेरा पैंट को भी कवर कर दिया और मेरे को स्कूल से घर तक ड्रॉप किया मेरे को।
Hello
ये
everyone.
मेरा बेस्ट फ्रेंड।
Welcome to the finale of Unlock BFSI 2.2 with Business Standard. Over the last couple of weeks, leading economists, fintech, mutual fund, and insurance heads helped us understand the way forward in the sector. Today is all about banking. We start with a keynote address and fireside chat with RBI Governor Mr. Shaktikanta Das. Half a day of exciting panel discussions with India's leading bankers up ahead. We will take a few questions for the panelists after the initial discussion. Please send them in the questions box on the website or as comments on Facebook if you're watching the Facebook Live. For social media conversations, use the hashtag BS_BFSI. I would now request Mr. Shamil Majumdar, Editor, Business Standard, to start the day.
Good morning, everybody. On behalf of Business Standard, a very warm welcome to the Reserve Bank of India Governor Shaktikanta Das to the final day of Unlock BFSI 2.0, our webinar series that started on August 30. Over the last 15 days, the webinars brought almost the entire financial sector together on the same platform. It started with some of the country's leading economists, then moved to the fintech sector, small finance banks, mutual funds, then life insurance and general insurance. Unlock BFSI 2.0 saw tremendous response from all over the world. That's the beauty of webinars. They don't have any boundaries as far as reach is concerned. Even as we speak, registrations for attendance are just swelling, which is to be expected as today is the grand finale of our webinar series. Today's highlight, of course, will be the keynote address by Governor Das. He's also gracefully accepted our request for a fireside chat after that. That will be followed by 2 more sessions, a roundtable with 6 of the country's leading bankers, and then the final discussion with SBI Chairman Rajneesh Kumar and Bfsi Bank CEO Aditya Puri. I'm sure all the viewers will have a lot of takeaway points from these power-packed discussions. Governor Das, we are indeed grateful to you, deeply grateful to you for agreeing to be here with us today, despite your super busy schedule in meeting the unprecedented challenge the entire ecosystem is facing. COVID-19, as the governor himself has said on many occasions, is the worst health and economic crisis in the last 100 years, with unprecedented negative consequences for output, jobs, and well-being. The pandemic perhaps represents so far the biggest test of robustness and resilience of the world's economic and financial system. In the midst of all this, Mr. Das's presence at the RBI has been reassuring, to say the least. And his calm disposition is just one of the many reasons for that. The entire team at RBI under his stewardship deserves compliments for the speed of response in a constantly changing world, where the traditional ways of governing and rulemaking have become completely irrelevant. Mr. Das's formidable track record as an able administrator in the government, a great communicator, and someone who listens to all stakeholders carefully is a refreshing change from many others who are obsessed with living in splendid isolation. These wonderful qualities have endeared him to everybody. But despite the stress his job entails, Mr. Das has kept his terrific sense of humor intact. And I'll give you one example. When a newspaper article wondered whether his heart is still in the government, Mr. Das told reporters the next day, "I don't know," and I quote, "I don't know where is the heart and where is the mind. All that I know is that both of them are with me." By his own admission, Mr. Das is an eternal optimist. We all hope it remains that way. So, ladies and gentlemen, the stage is set for what you have been keenly waiting for, a keynote address by Governor Shaktikanta Das. Let me add, today's discussions are being moderated by my colleague Tamal Bandyopadhyay, consulting editor of Business Standard, who, as you all know, is perhaps the best in the business. I would now request the governor to deliver his keynote address. Thank you very much. Governor Das, please.
Thank you, Syamalji, for that introduction. Good morning and namaskar to all the participants. It's good to see so many participants and good to see so many MDs and CEOs of banks who are participating in this conclave. And I would like to thank at the outset Business Standard for inviting me to be here. And I have been watching very carefully the proceedings, not live, but subsequently. I have been keeping track of the proceedings of this conclave, of this event which you have arranged over the last fortnight or so. So my congratulations to Business Standard. And when Tamal spoke to me and invited me, obviously it was not possible for me to say no. And Shyamalji, you will agree that, and you will remember that I had earlier agreed to participate in a similar event, but because of the interruption of the pandemic, that event could not take place. And but anyway, I'm extremely happy to be here. And since today's session is devoted to banking, I would confine my address primarily to the area of banking. The COVID-19 pandemic still continues to keep the world on the edge. The pandemic has so far infected more than 2-3 crore people and has claimed more than 8 lakh lives worldwide. The world is struggling to find a vaccine or a cure to the deadly virus. In India also, the spread of pandemic continues unabated, though the fatality rate is much lower. As the pandemic ravages on, the economic impact is hard to measure. While there are green shoots and some businesses are getting back to pre-pandemic levels, the uncertainty over the length and intensity of the pandemic and its impact on the economy continue to cause concern. In the wake of the pandemic, RBI has stepped forward and has so far announced various liquidity, monetary, regulatory, and supervisory measures in the form of interest rate cuts, higher durable liquidity, moratorium on debt servicing, asset classification, standstill, and very recently a special resolution window within our prudential framework for resolution of stressed assets. The framework for resolution of COVID-related stressed assets is a well thought out decision taken in consultation with various stakeholders and is aimed at striking a balance between protecting the interest of depositors and maintaining financial stability on the one hand, and preserving economic value of viable businesses by providing durable relief to businesses as well as individuals affected by COVID pandemic on the other hand. We expect efficient and diligent implementation of the resolution plans by the banks, keeping the above objectives in mind. While the moratorium on loans was a temporary solution in the context of the lockdown, the resolution framework is expected to give a durable relief to borrowers facing COVID-related stress. RBI's response to the situation arising out of COVID has been unprecedented. The measures taken by RBI are intended to deal with the specific situation of COVID and cannot obviously be permanent. Post-containment of COVID, I repeat, lest I am misunderstood, I repeat, post-containment of COVID, a very careful trajectory needs to be followed for orderly unwinding of the various counter-cyclical measures taken by the RBI, and the financial sector should return to normal functioning without relying on regulatory relaxations and other measures as the new norm. Now, I would like to very clearly say it's not as if we are going to unwind all the measures which we have announced. All that I am trying to highlight is that we are very carefully monitoring the situation, and post-containment, after the pandemic has been controlled, and when we enter the pre-pandemic, post-pandemic phase, then only there has to be a very calibrated, non-disruptive and cautious exit plan introduced. I am highlighting this point just to emphasize that RBI has taken or is taking a long-term view of things and not just thinking about tomorrow. We do think about today, we do think about tomorrow, we do think about day after, we also think about 1 year ahead or 2 year ahead, what next. So therefore, it's a comprehensive view that we are taking, and by no stretch it should be assumed that RBI is going to unwind any of the measures in the near future. In my address today, as I said, I would like to dwell upon the following theme. It is time for banks to look deeply within, and the focus will be on reorienting banking post-COVID. Just like boosting immunity of the population is the key to tackle the pandemic, the key to long-term financial stability would be to foster tangible improvement in the inherent ability of the banks to withstand exogenous shocks like the current pandemic. As I have stated elsewhere, the causes of weak banks can usually be traced to one or more of the following conditions: an inappropriate business model given the business environment, quality or lack of governance and decision-making, misalignment of internal incentive structures with external stakeholder interests or shareholder interests, and similar other factors. Accordingly, the core of resilient banks is made up of good governance, effective risk management, and robust internal controls. And I'm quite, I'm quite pleased to state that the overall, the Indian banking sector continues to be sound, continues to be stable. I'm highlighting these points because these are the areas which need greater attention. I'm highlighting these points not because they are absent or anything like that. I'm highlighting on these points because they need greater attention, and as everyone would agree, there is always a room for improvement. In recent years, the business landscape of banks has undergone significant change. Today, the banks need to look out for sunrise sectors while supporting those sectors which have the potential to bounce back. For instance, banks need to look at prospective business opportunities in the rural sector which remain unexplored despite efforts to support it. Banks also need to look at the area of startups, renewables, logistics, value chains, and other such potential areas. I have just listed a few, but there are several others. The banking sector has a responsible role to play, not only as a facilitator of growth of the economy, but also to earn its own bread. Thus, a complete relook at the business strategy and orientation is the need of the hour. Scale ignites the volume effect in business turnover, but that presupposes bigger size of banks. Despite several reforms in the banking sector since its nationalization, a lot more can be done and needs to be done. With change in time, the nature of reforms needs to be reconfigured. The current steps towards consolidation of public sector banks in line with the Narasimham Committee recommendations is a step in the right direction. Indian banks this way can reap the benefits of scale and become partners in the newer business opportunities across the globe. Larger and more efficient banks, both in public and private sector, can compete shoulder to shoulder with global banks to get a decent space in the global value chain. Size is essential, but efficiency is even more important. Efficiency, however, is much broader concept and requires several other factors to evolve and act along its side. The prerequisite will be to use technology. The quality and ingenuity of technology should match our aspirations of acquiring scale and diversion of business across the globe. The focus of use of technology should shift from transactions-based to business-oriented. While introspecting on newer ideas to improve the health of banks and quality of banking, it is fundamental to reform the culture of governance and risk management. These two areas lend inherent strength to businesses of banking, and a good amount of work has already been done in this direction. As you are aware, recently we have uploaded governance, a document on a discussion paper on governance in commercial banks, and we have received large number of comments, and they are under examination, and we will take into consideration all the suggestions and comments which have been received and come out with a final document. While it is natural that capital providers or investors would like to remain alive to the aspects of how exactly a bank is run, it is worthwhile to allow sufficient leeway to the management of the bank and to the board of the bank to run the affairs of a bank in a professional and autonomous fashion. A decent distance between the owner and the professionally sound management and the board would promote robustness of banking institutions. And this is a point which has been spoken about earlier. So I think I thought let me just highlight and touch upon this area, but this is an area which is constantly under discussion. There will be newer risks with newer business models for banks, especially in the context of COVID and going forward. More so when the banks get bigger and more connected across diverse jurisdictions. High growth by virtue of newer business models can be achieved with clear understanding of one's own strengths and weaknesses. Remaining overly risk averse may seem to be a measure of self-immunization, but will be self-defeating as it would affect the bottom lines of the banks adversely. Risk propensity should be aligned with individual banks' measured risk appetite. The risk management system should be sophisticated enough to smell vulnerabilities brewing within the various businesses and well in advance, and should be dynamic enough to capture the looming risks in sync with changes in external environment. One visible area of concern in the arena of risk management is the inability or the ability to manage the incidence of frauds, both cyber-related and otherwise. The higher incidence of frauds which have come to light in the recent times have their origins in not so efficient risk management capacity of the concerned banks, both at the time of sanctioning of loans as well as in post-sanction credit monitoring. And there are considerable room for improvement in these areas. An effective early warning system and forward-looking stress testing framework should also be an integral part of risk management framework of the banks. Banks should be able to pick up incipient signals of stress faced by their borrowers and take proactive remedial action within the resolution framework established or set up by the RBI, announced by the RBI last year on 7th June. And the rearranging of the loans or the credit facilities which have been given to the borrowers when there are incipient signs of stress, if it is done in a timely manner, naturally it will contribute to preservation of asset value of the borrower. In addition to strong risk culture, banks also should have appropriate compliance culture. There should be robust assurance mechanism by way of internal audit function. This is an integral part of sound corporate governance, and the banks also should highlight on the quality of customer service and redress of customer grievances. I'm just touching upon these points without elaborating further. The written text of my address will be uploaded in the RBI website immediately after my address and this interactive session is over. So I'm therefore not reading out the entire text of my address. I'm just highlighting and touching upon some of the major points. Indian banking and financial system has indeed displayed tremendous operational resilience in the face of COVID and lockdowns. Going ahead, financial institutions, and sorry, before I move on, I must say, when I say that Indian banking has displayed tremendous operational resilience, I must mention and compliment the banks for having maintained operational continuity in such challenging times. And our deepest appreciation goes out to all employees and officers and staff of the banks who have been working day in and day out, manning the front offices. And many of them have lost, some of them, I would not say many, some of them have lost lives while working on the counters and in the front offices. So our deep appreciation goes out to the commitment of the officers and employees of the bank. And it is indeed a sign of the maturity of the Indian banking system that, and thanks to technology which they have adopted, that continuity of operations have been maintained throughout this entire pandemic period. And I'm sure going forward, it will be adhered to, not only in terms of doing the operations, day-to-day operations, but also in terms of, let us say, for example, dealing with the moratorium announcement by the Reserve Bank. And now one does expect, the resolution framework for COVID stressed assets, which we have announced. We have announced very defined and calibrated and, very defined and specified timelines. And I'm quite confident, and I'm sure that the Indian banks, the Indian banking system, both public and private sector banks, will rise to the occasion and complete the entire process in time with due diligence. Going ahead, financial institutions in India have to walk a tightrope of nurturing the recovery within the overarching objective of preserving long-term stability of the financial system. The current pandemic-related shock is likely to place greater pressure on the balance sheets of banks, leading to erosion of their capital. And when I say this, I'm stating the obvious. It should not be read as if the government is sounding a warning signal or alarm signal. When we face a stressful and extremely stressful situation like this, which is once in a century, naturally it affects the balance sheet of banks. As I have said earlier in the SBI conclave, to say that the banks going forward will face stress is stating the obvious. What is more important than saying this, something which is obvious, what is more important is how the banks proactively react and respond to this challenge, which is ahead of the Indian banking sector, which is ahead of the Indian financial sector. So what is more important is how we respond to the situation, and not that we are in the midst of a stressful situation. The current pandemic-related shock is likely to place greater pressure on the balance sheets of the bank, as I said, leading to some amount of erosion of capital. Proactive building of buffers and raising capital will be crucial, not only to ensure credit flow, but also to build resilience in the financial system. And it includes resilience of individual banks and financial entities, as well as resilience of the financial sector as a whole. We have already advised, that is RBI has already advised the banks, and including the banks and also the large NBFCs as well as the deposit-taking NBFCs, to assess impact of COVID-19 on their balance sheet, asset quality, liquidity, profitability, and capital adequacy. Based on the outcome of such stress testing, banks and NBFCs should work out possible mitigation measures, including capital planning, capital raising, and contingency liquidity planning, among others. Upfront capital infusion would also improve the sentiment of investors and other stakeholders alike for the sector to continue remaining attractive for investors, both domestic and foreign, over the medium to long term. Some of the banks have already either raised or announced capital raising. This process needs to be carried forward vigorously by banks and NBFCs, both in the public and private sector. In conclusion, I would like to say that COVID-19 poses several challenges for banks and the financial sector. Proactive action on various fronts, some of which I have attempted to highlight, will enable us to deal with these challenges effectively and maintain the soundness of Indian banking system. I am reminded here of a quote from Leo Tolstoy in War and Peace. I quote, "A battle is won by those who firmly resolve to win it." Thank you very much.
Thank you, Governor, and very warm welcome to this we call it fireside chat, but on webinar, what do we say? There are many questions already for you, but probably we may not take for time's sake, because all the questions which I am going to ask you, a few questions are primarily because I don't understand banking much. So I have spoken to the market participant, economists, bond dealers, and so on and so forth. So I've collated all those. Only I have two personal questions, one in the beginning and one at the end. Sir, you have the toughest job being the country's chief money man at this point of time. We saw Dr. Jalan coming in late 90s in the midst of East Asian crisis. We saw Subbarao walking in just a week ahead of Lehman collapse. We saw 2013 governor was, when the India's current account deficit widened and rupee was sleeping. But this black swan event surpassed everything. So how does it feel, sir, managing, being the country's money manager at this point of time? Because no governor has quoted Mahatma Gandhi so many times.
Well, I think how does it feel is perhaps a question I should be replying, if at all, if and when I write my memoirs. But I must say that, our effort has been in RBI, and I must appreciate, the contribution of all my colleagues in RBI. We are, monitoring the situation, and we are very, very careful and watchful of the emerging developments in the domestic economy, in the global economy, in the financial sector, in the money market. And it's a challenge which we have to deal with. When you go out and play a game of cricket or football or any other game, you have no time to think how it feels. For example, in the game of cricket, if a ball comes, you have to just, you have split second to think about it and take a decision to hit the ball or deflect the ball or play a defensive stroke. So you have to take decisions in anticipation of certain situations. You need to take decisions which are proactive to deal with emerging situations. You also need to take decisions which respond to emerging challenges. So, as I have said earlier, it's never a dull moment in a central bank, and more so in times like this.
Thank you, Governor. It's a privilege and honor to have you among us. Not today, I'm talking about in Indian Central Bank. Sir, you have refrained from giving either estimate on GDP or inflation. And you are probably the only central banker globally. Only once at the height of COVID crisis, FOMC in US, they refrained, but they continued. And you always cite that there's uncertain time. But the feeling is this: actually, central bank is adding to uncertainty by not giving any estimate. Once you are convinced that you said that, that inflation will be far lower in the second half, but you are not quantified. You also had said in the annual report that this time economic scenario is far worse than post Lehman, because at that time economy was growing and here economy was faltering when COVID hit. So what actually prevents you from giving the estimates? You are the only central bank globally.
No, you see, the times are very uncertain. In fact, I said it in another interview recently also. The times are uncertain, and the situation keeps changing very fast. So if you give any number, whether it is with regard to inflation or with regard to growth, there is absolutely no certainty that 1 month down the road, the figures will not be changed. I'm talking especially about growth, and growth is not something which is impacted by domestic factors or the domestic COVID curve. It is also impacted by global factors. It is also impacted by the COVID curve in other parts of the world and so many other global developments in matters of impact of COVID, or in matters of how the countries are responding to the COVID situation. So in an uncertain situation like this, when a central bank gives a number, the central bank has to give a number, the number in a very, very responsible manner. The central bank doesn't have the luxury of giving one number today and modifying it 1 or 2 months down the road. And as I have said a few days ago in another interview, once there is some amount of clarity about the COVID curve or about the other aspects around COVID, then RBI will certainly start giving the numbers. And also, let me mention, you said that in the annual report we have pointed out that the growth was already under stress in India before the COVID. Yes, 2019, and precisely for that reason, the RBI had initiated a cycle of rate cuts as early as February 2019. It was mainly to respond to the, to the slowing momentum in our growth. So therefore, but I must mention that in certain other aspects, Indian economy and financial sector this time around was far more resilient than what was the situation in during the global financial crisis. This time our debt to GDP had improved. This time our fiscal deficit was very much back on rails. This time inflation was also under control. This time the current account deficit, which is very important for the financial sector, the current account deficit was also well under control. So therefore, it's not that Indian economy was fragile going into the pandemic. I think it's a mixed picture. In certain areas, the growth had slowed down in India going into the pandemic. But in certain other areas, I think Indian economy was far stronger and had many positive features vis-a-vis what was the situation during the, when the global financial crisis hit the Indian economy. But coming back to your main question, I think we will start giving the numbers once we have clarity. And we are constantly, engaged with several experts and outside and internally also we are deliberating on this issue. We will start giving the numbers once there is some amount of clarity about, the COVID situation.
Thank you, Governor. Very reassuring to hear you the strength of Indian economy and the banking system. Just for the record, no offense intended. Even on certain times, when the times are certain, RBI's estimate of particularly of inflation, it's not exactly correct. I mean, it keeps on changing, but that's a separate story. Sir, you spoke about anticipating this and being proactive and cutting rates. Since February 2019, you have cut 250 basis points, and since February 2020, you have cut 115 basis points. But it seems that market is not listening to it. If you have seen the bond yield the past since your last policy, where you were extremely dovish statement, but then you refrained from cut because of the inflation worry, or if I may say not worry but concern. So in retrospect, do you think that you front-loaded the cuts little early? It could have been, could you have been little slower in cuts? Because now, probably you have exhausted at least that avenue. Am I correct in saying that?
No, first thing I would like to say is that we have not exhausted our policy options, whether it relates to the rate cut or it relates to any other aspect of central banking. We have not exhausted our instruments or ammunition. What we have said, what the MPC resolution said, and what I have said in my MPC minutes, and what the other members of MPC have also said, is that the decision of the MPC was to keep the gunpowder dry. And with regard to the two aspects of your question. The first question you asked, you mentioned about the inflation or the growth numbers not sort of sticking to what as per RBI projections. Now let's take the case of inflation. We project a normal monsoon, but then you have sudden, like last year, there are unseasonal, unprecedented rains, and that pushed up the prices of vegetables. Now this is something which RBI, or for that matter, this is something which no one could have anticipated. So therefore, I mean, you make a projection based on certain available data or based on certain available variables. You make certain assumptions. When going forward, certain totally unexpected, unanticipated developments like sudden rains or sudden floods can happen. Now, with regard to the impact of the monetary policy, and you mentioned that the rate cut, whether we started it a bit early, and whether it's running out. Now, you talked about the bond yields. Now, the bond yields, it's only in the last couple of weeks that the bond yields have shot up. But all this while, the bond yields were hovering around that 5.77, which is the new 10-year GSEC, or around the 5.79, which was the earlier 10-year GSEC. All these months, the rates, the bond yields were hovering around that 5.8, 5.82, 5.83. So it was close to that. It's only in the last fortnight that they have, sort of hardened. The bond yields have hardened. And so it's not correct to say that RBI policy, rate cuts have not worked. And if I can draw attention, your attention and the attention of the other participants who are here, if you recall, my statement which I made on 6th August, the MPC statement which I made on 6th August, I have clearly said how the rate transmission, that is the rate cut transmission, has taken place to various segments of the financial and money markets. Let us take the case of corporate bond markets. In AAA segment, the transmission has been more than the yields. The interest rates have fallen by more than 270 basis points. Even investment grade, the lowest investment grade in triple B minus, also that there has been rate transmission. With regard to fresh loans sanctioned by the banks, the transmission has been about 160 basis points, of which about 90 basis points transmission took place post-March. So therefore, whatever measures the Reserve Bank has taken, whether it is rate cut or whether it is liquidity infusion or other measures, I think they are having their desired impact, and the impact is still playing out. And with regard to the current spike of bond yield, it is something which has happened in the last fortnight. You see, as RBI, our emphasis is to ensure that the financial markets, all segments of the financial market, whether it is the bond market or any other, or the currency market, they function in an efficient and stable manner. That is the responsibility of RBI as a regulator. We are constantly watchful, extremely watchful, and as and when situation warrants, or as and when we anticipate certain emerging situations, we will deal with it.
Thank you, sir. So you are reiterating that all options are open, conventional and unconventional, and even rate cut. So you have changed the way monetary policy, we have seen the monetary policy. I mean, you have made it that 25 bips hike or cut is no more a sacrosanct. It can be something else. You have introduced TLTRO. You have introduced twists. So many new things you have done. So do you think, sir, is the time also to be a little explicit in your forward guidance on policy rates, yield curve, liquidity management, etc.? Because somehow there is a bit of, over the last fortnight, I'm just talking about that, there is sort of there's a disconnect between RBI and markets. I'm not talking on behalf of the markets. I'm not a bond dealer, so I have no stake there. But since you have made so many changes, do you think you could be more explicit? Like yes, you will continue to have excess liquidity and reverse repo will continue to remain the functional policy rate, so on and so forth. That will be reassurance, I think, for the market. Is that so?
Well, I think it will be always good. The central bank should not become too predictable and should always give surprises to the market. But on a more serious note, I mean, that was beside the point. On a more serious note, let me say that we live in a dynamic world. Forward guidance we have been giving. For example, with regard to the policy rates, with regard to the MPC resolutions, if you see, we have given sufficient forward guidance when we announced changeover from neutral into accommodative stance, and we said, and we have even said so in our 6th August MPC also, that the monetary policy stance will continue to be accommodative as long as it is necessary as long as it is necessary for growth, and keeping in mind or rather while checking having the inflation objective and while keeping inflation under control. So we have given forward guidance with regard to our monetary policy. And with regard to the new measures which we have announced, I would just like to say that it's not deliberately we are suppressing or holding back any information. We live in a dynamic world. In a dynamic world, situations arise which no one would have anticipated, which no one would have expected. So when a situation arises, then the central bank has to respond to that situation. So in a dynamic world, it is quite natural that the Reserve Bank will have to come out with new instruments and announce them. Take the case of TLTRO you mentioned. Now, in February first week in that MPC, we had announced LTRO. Now we found that LTRO was, the bulk of the LTRO was going into, was going to the banks, and it was going into, various other purposes. Then we realized that we would like to make it targeted to the corporate bond markets. So therefore, we announced the TLTRO. It was a targeted LTRO. We announced, LTRO, which was a liquidity infusion measures. We found that banks which had excess SLR, they were able to avail, the benefit under they were able to get additional liquidity under the LTRO. So therefore, on 27th March, we announced a CRR cut by 1%, because CRR cut is agnostic to how much SLR bonds the banks have. So it uniformly, it gives, depending on the size of the bank, every bank got additional liquidity to deploy. So therefore, we are responding to constant situations. We, for example, we found that the microfinance segment and small NBFCs were not getting additional liquidity. So therefore, we announced targeted direct liquidity infusion into all India financial institutions like the NABARD, the National Housing Bank, and the SIDBI, and who in turn, gave liquidity and extended the liquidity and credit to smaller MFIs, to smaller NBFCs, and other such small entities. So we live in a dynamic world. New problems arise, new challenges arise, and we keep on responding to that. So it is quite natural that there will be such new measures announced by RBI from time to time.
No, absolutely, there's no complaint. In fact, you are dynamic, you are flexible, and you are very different. So it's all in a positive sense, I'm saying. So you have been continuously saying that your objective is to see through the government borrowing, market borrowing in a non-disruptive way. And we know that it has gone up, and it could go even up. And if we include both the state and central government borrowing, the amount is quite high. So is there any kind of thing you are expecting from the government? Is a sort of a fiscal roadmap? What's your expectation from the government?
No, I think I must say that the government has been very responsible in announcing the various fiscal support measures. If you see the announcements made by the government, there are two things which stand out. The first set of announcements, which I think government made on 26th March, basically were targeted at the vulnerable sections of the society, the poorer sections of the society, through the PM Garib Kalyan Yojana and the other measures. Very recently, again, the NREGA allocation has been substantially increased, or direct DBT to the mudra, no frill accounts which the banks have, and which the poorer sections of the society they have. So DBT and all these measures, that was mainly to support the disadvantaged sections. Then subsequently, I think in the month of May, in the middle of May, the government announced several other measures. And second, so first point, which government, which has to be noticed, is that the first set of measures was targeted towards the poorer sections of the society. And then the lot of other measures which were announced in May. One critical component of that were a series of reform measures which the government has announced. So I think government has been fiscally very, very responsible. Their response has been very calibrated. Well, I cannot speak for the government. I mean, it's for the government to decide on the fiscal roadmap. And I cannot really speak for the government. But I just want to say that in the central bank, as observers of what is happening in the country in the fiscal policy, I think the government's response has been very prudent and very calibrated. Coming to the bond yields, I was just yesterday at the the new 10-year bond yield, it went up to about 6.22. Then it came down post announcement of the operation twist by RBI, It came down to 6.12. Yesterday, it suddenly shot up to 6.19. I was just looking at my screen, and I think at the moment as we are speaking, it is 6.14. So therefore, bond market is impacted by so many other factors. A statement comes from FMOC in the United States, the bond markets in India will obviously react to that. For example, Jerry Powell said that US will not manage bond yields. Now, immediately the markets across the world, they reacted. I'm not saying that RBI manages the bond yields. Bond yields is a function of the market. But our responsibility is to ensure that there is orderly, non-disruptive borrowing by the government. And
Absolutely fine. So we'll have just two more quick questions, sir. One is this: now you are expecting a new MPC. Now, given a choice, would you like to see, like right now you have three from Reserve Bank of India and three outsiders, but all of them are academic world and economists. Do you think the ideal composition should be person from finance or labor market? That's the kind of thing you think the new composition, if you have a say, would you like to have that? That's one. And instead of targeting headline inflation, should core inflation be the concern of MPC?
No, I think, so far as the composition of the committee is concerned, it's the prerogative of the government to appoint the external members. But yes, having said that, let me also say that the governor is a part of the committee which selects the external members and recommends it to the ACC for approval. So I am a part of the search cum selection committee of the government, but it is entirely government's prerogative. And to your point, I would like to say that the aspect of conflict of interest is also something which has to be taken into consideration. It is there in the Act, and it is there in the RBI Act in the sections relating to the MPC. Now, with regard to your other question, where you said with regard to the policy
headline inflation, yeah.
Sorry.
Headline inflation versus core inflation. Because headline, there's a overloaded in terms of food inflation, which is it's completely on which you have you can't control that. So
you see the legal provision. If you see, I think section 45, section 45ZA of the RBI Act, which deals with monetary policy. I think it's very clear. It says that RBI is responsible to maintain price stability, and price stability is defined in terms of maintaining CPI inflation. So the law is very clear, and so therefore, there is no point in entering into something which is already cast in black and white in the act of the parliament passed by the parliament.
Okay, sir, we are running out of time, so I have only one more question and then one observation. It's you are pretty, I would say that, well, you are all praise for the banking system, you said and all, but your annual report spoke about how risk averse are the banks, and you did say that basically they are not doing the job of financial intermediation. So my question to you, sir, I mean, how do you make them shed their risk aversion? Because they are going in a big way into buying bonds and helping the government borrowing program, etc. In the process, if the bond yields continue to rise, they may get hit. They're also scared there on that part of thing and all. So is there any way what can RBI do to help the bank or make the bank shed their risk aversion? One could be like, would you like to cut down the risk weightage for certain segments to give to encourage them to give loans? Would you like to raise the HTM category to protect them from the from the risk of bond yield going up and impact on their portfolio? I'm just curious to know, sir, how would you make them get into lending? And as you say, that is the business of financial intermediary.
Okay, what measures we will take going forward? Obviously, I cannot spell out, and I cannot give out. You will have to wait as and when any decision is taken by the RBI. You will be the first to come to know because we announce it in the media. And with regard to the banks, well, I said that the Indian banking system is sound and safe. Having said that, I have pointed out in my address, the text is the text of which will be uploaded in the RBI website. I have also said that, and let me once again repeat, and I have said it in the financial stability report in my forward to the financial stability report also. Now, extreme risk aversion can be self-defeating. And I said it in today's address also, that extreme risk aversion would create a situation where the banks will not be able to win their bread. In other words, it will impact their income also. Extreme risk aversion is certainly not desirable. What is desirable, I have said, is that focus on governance, on risk management, on quality of decision making, and going forward, building up resilience. So risk aversion is something which needs to be, which needs to be dealt with effectively by the banks. The problem of frauds in banks also is something which I have highlighted. And there are several other areas which I have highlighted in my speech, in my address today, which is there in the text. And let me also say that you asked what the Reserve Bank can do. Now, over the last, several months, if you see, we have come out with several regulatory guidelines for banks, for NBFCs, for urban cooperative banks, for the financial sector as a whole. And let me also mention that we are constantly engaged and we are constantly holding consultation with the banks. I would have, after my taking over in the RBI in the last 1.5 hours, last 1.5 years, I would have had at least about 5 to 6 or maybe 7 interactions with the MDs and CEOs of both public and private sector banks. And even during the times of COVID, we have had our interaction. And even before deciding on the resolution framework, we did have an interaction with some of the senior bankers, both serving bankers as well as retired bankers. So we are constantly, RBI as an institution, we are constantly engaged with the banks. And that is why, as the theme of my speech today, I have decided to call it, it is time for banks to look deeply within, reorienting banking post-COVID. Now, I don't want to sort of stand in a high pedestal and start sermonizing to the banks. Of course, as a regulator, we are required to give regulatory guidelines and we will continue to do that. But let me also say that our approach has been consultative and we are constantly engaged with the banks as a central bank. And we will do all that is necessary to sort of ensure that the Indian banking system continues to be sound and safe.
Thank you, sir. You are innovative, you are flexible, you are dynamic, and you believe in consultative process, be it markets, be it banking, all participant, all constituents, and that's very reassuring and it's a refreshing change on the Mint Road in Mumbai. Sir, my last thing is a personal question. Did you play cricket in your college or university days, or the IS Mussoorie, wherever your first initiation was there? Used to play cricket, sir?
Yeah, I have played the game of cricket in my school, not so much in college, but I have played the game of cricket in school, and thereafter off and on. I have been playing the game of cricket. And let me also mention that I am an avid follower of the game of cricket, and I do have some knowledge and idea about the nuances of the game of cricket.
Sir, you don't have knowledge and ideas. That's I mean, I don't bother about that, but still you are playing cricket. So if I'm a bowler, on the media, it's very difficult. Forget getting out. There can't be even one appeal, because the ball which is going outside the off stump, you just leave it like that, like the MPC question, or the balls which are bouncers, etc. You are either pull or hook and goes outside the boundary. So from media, we can't just, make even one appeal. How's that? You are continuously playing cricket, and sir, continue to play cricket. I wish we could have extended it by 1 hour or so. But it's amazing to hear you. You are so meticulous and so reassuring for the banking, all the bankers and all the constituents of banking system to hear the governor in such a difficult time. Thank you, sir. Thank you.
Thank you. Thank you. And namaskar to all the participants. Thank you.
Thank you, sir. Thank you. Yeah, now I think we'll go for the next session. Manish, can you hear?
He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard.
एक बार आके देख लो, कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
कल ना स्कूल में मेरी पैंट फट गई थी पीछे से, तो ये है ना मेरा फ्रेंड सुमीर, वो मेरा पूरा दिन मेरा पीछे पीछे चल के वो मेरा पैंट को भी कवर कर दिया और मेरे को स्कूल से घर तक ड्रॉप किया मेरे को। ये मेरा बेस्ट फ्रेंड है।
ऐसी दोस्ती अगर एक बैंक निभाए तो आईडीबीआई बैंक ऐसा, दोस्त जैसा।
Hello and welcome. Good morning, good afternoon, good evening, depending on which part of the world you are watching from. The Big Banker Show, and my apology to the bankers, but I'm sure nobody would complain. We are starting it 10 minutes later because it was so engaging conversation with Governor, and I'm sure you are also enjoying it. So without doing much, let's get straight into this. We have a fascinating panel. Amitabh Chaudhary from Axis Bank. We have Citibank India head Ashok Puller. We have two large public sector banks, PNB and Union Bank. Both of them are in the process or in the completing their, one of them already completed the consolidation process. We have IDFC first. Vaidyanathan is a very different kind of banking model. And finally, we have IDBI. I don't know how to classify. I'll call you a litigon, a hybrid from a female tigon, and this thing is a very, very big 3 quintal plus, big animal in the financial sector, because somebody calls you private, somebody call you public, so I call you litigon. No offense intended, sir. So let's go straight here. We have about an hour, 5 minutes, so we'll take a few questions. The first, the talk of the town is moratorium and its impact. Individually, you're talking to your analysts and all. We'll start alphabetically. Maybe Amitabh sir, can you just give us a few minutes exactly what's happening? Because people, Indian banks follow the accounting practice where whether you are getting the interest or not, you are booking the interest. So we really don't know. Can you give us? I don't want us think that how bad or this thing or not. Is it getting better from May to June to July to August? And what's the way forward?
So, well, Tamal, as you very rightly pointed out, the Morat 2 was definitely better than Morat 1, and it does not matter as to how people are calculating their Morat numbers, because I think different institutions are using different ways of numerator and denominator, but even just keeping them aside, I think the overall trend is obviously headed in the right direction. There was significant level of reduction in the overall Morat numbers across the financial system. Now we have obviously a new dispensation announced by RBI on restructuring, and that will, I guess, play out from September onwards, and it will be a couple of months after which we'll get a better idea in terms of how many of the institutions and individual borrowers have used that particular facility and how many banks have granted that refinance option to their borrowers. My view is that if you look at the range of Morat numbers, in some cases, it is quite worrying because the numbers are quite large. And by the way, Morat should not be used as the only barometer of problem. There are issues around bounce rates. There are issues around the fact that a lot of the customers are just conserving cash. As you heard the RBI governor, it is very difficult to predict how this crisis will play out, how quickly the economy will revive. And given the slowdown which we have observed, slowdown means in terms of the pickup in economy we have observed in July and August, I think it will be a long haul for the economy to come back to the pre-COVID levels. And as Tamal, you yourself pointed out, economy had been slowing down in the last financial year anyway. So when we entered COVID, the economy was on a kind of slowdown path, and then we had this severe economic shock. So yes, we have this restructuring option which has been given. We have now the latest coming in the form of Supreme Court asking some tough questions on interest and interest on interest, and I don't know what implications it could have.
Yes.
Interesting times ahead. But a lot of the banks are watching it very, very closely. At least the way we are looking at it in Axis Bank, giving a restructuring option to a borrower is one thing, and it's something which the borrower, if they deserve it, they should get it. But what kind of accounting policies you follow and whether you're conservative or not is a different option, and it's a different way of looking at it. We in Axis are trying to become a very conservative institution, so we will continue to use the pre-COVID dispensations rather than the new dispensation which RBI has given on how we account for any restructuring we might give. I don't want to hog everything. I'm sure the other participants also have.
Thanks, Amitabh. Let's hear a public sector banker, Punjab National Bank. You are the post consolidation. You are the biggest. Mallikarjun Sahab, you always speak your mind. So give us a sense on moratorium, and also if you can get into. I'm not looking for your balance sheet. You don't have to reveal that. You are a listed entity, so I'm not getting into that. But can you give us a sense, like sector-wise, which sectors are more vulnerable, which sectors are less vulnerable in that sense? A few minutes. Right. And how is the progress?
Right. First of all, moratorium should be seen, as rightly the governor has spelled out, is a temporary phenomena. It can never be seen as a permanent solution for any kind of an impact what this COVID has created in our country or even globally as well. Moratorium was an immediate reaction for what has happened, and to understand the impact of what has happened, the moratorium will work as a panacea in the shorter term. On that note, our RBI has really come out with the policy. Now, if you look at in the economy, while the moratorium has given some element of comfort to those particularly in the personal loan segment, those in the salaried status segment, those in the retail segment, who were not aware rather what could have been the impact. Now that this spellout is available in front of them, many of the accounts probably can be coming to normalcy just with the moratorium. However, the window of restructuring is open for taking care of majority of the business concerns who are affected very badly. And the question of coming back to normalcy may depend on how they come back. That is, it depends from sector to sector. You asked about which sectors will have a lot of problem, which will come back early. See, predominantly the sectors related to aviation, sectors related to hospitality industry, sectors related to tourism industry, they will take longer time because it is dependent on social behavior of the people post-pandemic as to how they would be moving ahead to use those kind of sectors. So we foresee that these sectors will have tough time to come back, but then we'll have to look at in terms of restructuring to understand how they will come back. Other sectors as well, many of the industries where if they are labor intensive, they may take a little more time. However, if they're dependent on more technology where the operating cycle come back very fast, they will come back much better than what is expected, because everybody in the ecosystem, having seen the impact of pandemic, are longing to come back to normalcy. We have seen in some of the sectors like textiles or automobile or otherwise, the green shoots are appearing in the economy. Even Maruti has gone on to say that July was extremely good for them, though he has indicated that it cannot be extrapolated for the entire year, but it indicates that there is a intent on the industries to come back to normalcy. So on that note, I'm of the firm opinion that the festive season should give wonderful opportunity for some of the industries to come back, and it will also give us an opportunity to assess as to how they fan out in terms of undertaking the restructuring of various accounts within the window of RBI.
Thank you, Mallikarjun Sahab. So you are saying that in the third quarter of the fiscal year, we'll get to know, you'll get a sense where we are heading to. Absolutely. So I've heard Amitabh heading a very large, smart, tech-savvy private bank. We have heard Delhi-based Punjab National Bank CEO, the largest among public sector banks. Let's change focus and ask Ashu. Your playing turf is slightly different. Citibank's clientele is very different. So tell us, Ashu, what's the scene? Again, I am not fishing for confidential information, but can you give us a sense when you started in April, March, and now how things are panning out? And sector-wise, what's your take? And when do you see that you get a feel what's happening?
So I think, Tamal, what I'll say is, I think things are still pretty complicated, right? I think our general assessment, and while it varies from sector to sector, is corporates are kind of back to 70 to 75% of the pre-COVID levels, and obviously it'll vary a bit by the sector. And I think the constraints are perhaps more limiting on the demand side, though there are obstructions which happen on the supply side because of local lockdowns, change of, one person on the factory floor gets COVID and then you need to shut down the factory and cleanse it. So there are clearly lots of obstacles which are there to get back to normalcy, and ultimately till the consumers fare getting on with the normal activity, I think we will not have full certainty. Having said that, I think the places where we have started to see, now there were certain sectors which obviously never took much of a hit, whether there was the telecom operators or some of the more digital delivery platforms. But where we have started seeing early green shoots, and I think Mr. Mallikarjun mentioned as well, is automotive, cement, steel. And we saw the steel sector actually raising prices since July, because I think some of the infrastructure spending from the government seems to be coming through. So I think there are some recoveries, but I think we are clearly far away from getting back to normal times. I think we'll have to wait and watch. And to me, ultimately, this is a health crisis. And till we finally overcome that, I think you will always have a little bit of friction before you come back to normalcy.
Thanks, Ashu. Let's go to Vaidyanathan, popularly known as Vaidya rather. Sorry, my apology, Vaidya. Tell us, because your model is very different. You are very different from Axis Bank or IDBI, and of course for public sector banks and all. You are creating actually new market, little high margin business, and people which are normally not attended to or looked after by the conventional banking system. You are reaching out to them. So give us a sense. What is your feeling sector wise, good, bad, ugly? How things are panning out, and when do you see that you will see some proverbial light at the end of the tunnel?
Yes, we are a bit different because basically our lending platform is what was being done in an NBFC, where we were financing lots of people who are.
Will I talk a bit louder?
Okay, I said our model is a bit different because our lending side is an NBFC's lending model, where we are lending to small entrepreneurs and consumers who are not filing tax returns, and our borrowing is of a bank. So that's what broadly a model is. Now, in that light, what do we see? Two things we are seeing. When I just look around, I am beginning to say maids are back to work. I am beginning to see there is a renovation going on in the house. Workers are willing to come back to work, even not in full strength, but they are back to work. Roads are beginning to open up. You can see traffic on the roads. Now, trains are a big problem because metros, these suburban trains are not started. But when that comes up, more traffic will start flowing. So economic activity has definitely started, and I hope and I believe everybody seeing around it will begin to see it. Now, what has that resulted in? It has obviously income is coming back. Salons, for example, are running at about 60% capacity of pre-COVID situation. So obviously income is about 60% or 70% of what it was maybe 5 months ago. Now, therefore, if you give this another 6 odd months, things should be back in a reasonably good steam. Maybe it'll be 90-95%. And therefore, that augurs well for that segment. Now, the second implication that we're seeing around us is how quickly people have moved, like even, our tutors and guitar teachers and everybody have moved online. And therefore, the market actually has expanded. Now, if you were teaching someone singing, now you can have 8 students because from across the world, rather than some physically you'll go and teach. So some industries actually have benefited, and we should not forget that at all in this current situation. Third thing is that as far as moratorium is concerned, I think like Amita very correctly pointed out, the moratorium 2 is better than 1, and numbers are different. For example, in our case, we reported at 28% moratorium in moratorium 2.0. But when we used Mr. Rajneesh Kumar's definition of SBI's definition of moratorium, that number showed at 15% for us. So, and we felt suddenly happy. Otherwise, we were beating ourselves up and saying, why are we at 28%? But now we figured out we're 15. So therefore, moratorium definitions are different, but I think moratorium broadly looking a bit better. Fourthly, I'd say the restructuring we will provide when it's come up. So if retail customers ask, we will provide. If corporate customers ask, we'll provide, based of course on the assessment. But that's our assessment because like Governor pointed out, moratorium was a temporary relief. An enduring restructuring solution will be a bit of an enduring situation, enduring relief, because it's like oxygen. So these are my top 4 comments, that economy is slightly improving, maybe 60% of the pre-COVID pre-COVID. But with moratorium and with restructuring, things should get better. And by March is when you will see the true extent of the problem. And by that time, if relief comes, we will coincide the two.
Which one, which are the industries will be bouncing faster, you think? From your area, because you also said that, I did not want to say because I thought you would take it offense that you were a sort of NBFC among banks.
No, I have
so it's
no
very
problems.
critical.
No, it's
very critical because MSMEs and SMEs, that's the focus area of Indian government. So which are the industries in that segment you think will bounce back faster?
See, the ones that are, the ones which are affected obviously are tourism, airlines, hotels, all physical contact things. The ones which were in the mid, those are the, let me say, the red category. The mid category, the yellow so-called category, if you could call it so, will be, say, IT, ITES, automobile, components market, consumer durables. These will come back faster. You are already seeing commentary on automobiles industry, for example. The ones which are not affected were industries like, say, FMCG, chemicals, agri products, agri components, rural, oil and gas, packaging, pharma. These were not affected by the slowdown. So they're okay. So when we see the extent of destruction going on, we should see in totality that some actually did better, like the online, some did okay, like the ones I talked about, some were yellow, which will bounce back quickly, and some which are, of course, are a bad shape.
Thanks. Rajkiran sir, you tell me, I remember when we met personally, I think I met you probably a month back or so, and I found you so busy with basically pushing that MSME top-up loan. It's a part of government's program of 3 trillion loan and all. So I'm sure you continue to be busy with that. But give us a sense, the same question I don't want to repeat. What's happening on the moratorium front, on the quality of assets sector-wise?
Yeah, thank you, Mr. Tamal. See, the moratorium was a temporary relief, as made out very clearly. It's not only a temporary relief, actually, when the shock came, basically for the businesses, this was such a big relief, because actually, basically for 6 months, there is no demand on any customer. So it gives such a good relief to everyone, so that they can reorient themselves, replan and all that. Like, suppose if you are paying a housing loan installment and 6 months you will not pay, anyway, it will be stretching your repayment. Similarly, on the MSME side, even for the corporates, even the best of the corporates availed it for conserving cash. So moratorium had been useful, but it has a limited use. So now I think good, it stops now a few days from today. Now, many people are trying to draw conclusion from moratorium numbers to assess my asset quality. I think this is somewhere like we are doing a wrong thing, because moratorium is availed by people who need it and people who do not need it also. That numbers really do not indicate how my balance sheet will look like, because some customer would have paid his installment, may not be in moratorium, but still may need restructuring. So I think these numbers, which will evolve in September, October, is going to be different for different banks, depending on the quality of assets they hold. And the corporates also, actually, like that way we have a better clarity on corporates today, because these are much bigger accounts. So we have gone case by case and see who will need restructuring and all that. So I think we have a better color on that. But then when it comes to personal loans and MSME, still we do not know how the customer is going to behave. So like if you see in the retail, mortgage, housing and all that, people have used moratorium. But then September they can be as regular because life is back to normalcy. So this customer behavior pattern we still don't know. And similarly in MSME, as Vaidya rightly said, there are a lot of sectors which are back to normalcy at about 80% operations and all that. And in 6 months, since they have not paid installments, they have conserved cash also. So we expect that many of them will be regular by September, because restructuring all said and done is not a very good credibility for any business. So once the account is restructured, it goes on with him forever. So next time when they have an expansion plan, when they approach a bank, when the banker sees the account is restructured once, we are a bit negative on that account. This is a banker's approach. So naturally, the customer will try his best to avoid restructuring. So that is our feeling. Let us see how it evolves. I think the Q3, that is September, October, should give a better number.
Okay, thank you, Rajkiran sir. So essentially, you're saying things are getting better. Now, one of you or two of you are saying Q3. Vaidya said Q4. So let's hear IDBI Rakesh ji. First of all, Badayo sir. 13 successive quarter of losses, 42,000 crore. And then you came back to profit in March and you repeated in June. So congratulations, sir. First is this, you deserve this. Congratulations, fantastic job. Now tell us on the same question, what is your sense?
So thank you very much for the kind words. Yes, actually, I may add that even in December, we were in profit before tax. The loss was mainly because of reversal of deferred DTA. So like coming to the moratorium, as all my friends speakers have told, like it was basically a temporary situation. Now,
sir, talk a bit louder, little louder.
This situation, this was a very temporary measure which was immediately taken up by RBI for giving the immediate relief. And in fact, that time also we were talking whether it will be extended or whether we should come out with the restructuring plan. And finally, RBI has given this restructuring package. Now, this basically, this pandemic, as I was telling, is different from earlier. It was, economy related. Now it's health related, and lot of uncertainties are attached. And I fully agree with Mr. Rajkiran Rai that, based on the number of moratorium, we should not judge this, the quality of balance sheet of any bank. Basically, it should be judged how these securities are backed. And, whether, how on the basis of this in individual cases, based on that, what CIBIL score is there, where borrowers have taken loan and still they have availed of the moratorium, not that they are going to default. But yes, the position is changing regularly because, the every day people are withdrawing from the moratorium period. So that's one. Now then, this restructuring part also, basically, like, although it is a basic good relief, but we have done in retail also, we have got the feedback from the borrowers, and for this MSME and large in any case, because there are limited number of borrowers, the feedback will be more reliable. So the information available with us is that only 4 to 5% will be availing of this facility. Even if we take up on the conservative side, maximum 6 to 8% may be availing this facility. So I think the things are coming back, but yet certainly certain sectors like aviation and hotel, tourism and all these things, they are affected much. My interaction with the steel industry borrowers and all these things, this shows that, they are running at almost same capacity which they were running before the COVID situation. So things are improving, but certainly I think the bank's balance sheet size will be clear only after we publish the December results. September also will not be a clear picture. December, when this moratorium is lifted, restructuring is done, part restructuring is done, that time we will know that actually how it, opens up.
Thank you, Rakesh sir. So let's cut into the second thing, which again Governor today re-emphasized, and in the annual report he was very categorical. There's this that you are risk averse. He attacked the risk aversion, and you said that you are not doing the job. You are not doing the job of financial intermediaries. You are not giving credit. So Rakesh sir, I think you are constrained from giving credit because you are under PCA, right? Prompt corrective action. So with 2 quarters, we'll start with you, with 2 quarters successive profit. Now, do you expect RBI to now allow you to, because RBI can't tell that you are risk averse. You are not been allowed to give new fresh loans. So do you think now RBI will allow you to give fresh loans because 2 quarters consecutive profit, and I'm sure going forward the run will continue? Or
One
you get
thing,
out of PCA, sir, or you are happy under PCA?
no, one thing I like to clarify that no banker is risk averse because we are in the banking of business of lending. If we raise deposit and do not lend, how from where we will make the profit? So risk averseness is not there. But yes, certainly we have to manage the risk in a better quality way. In the past, maybe we would have given disproportionate advances to certain industries. But the risk management part, every banker will do, and we will also like to do within the RBI permitted relaxations and the facilities. Not that we are not lending, we are lending up to a certain limit, and there our growth, in fact up to March there was very good growth, but during these 6 months the growth has not happened. So that means there is not much demand also, not in retail sector. So if retail there is no demand, so from where bankers will give? But certainly which factors which government had announced, like that guaranteed scheme and all these things, there has been good demand and we have been lending. Now, as regards PCA is concerned, of course, it's RBI's prerogative and RBI has to take a view. But as far as my job is concerned, my job is to comply with all the parameters and show continuous gradual improvement in the performance of the bank. So not only capital part or profitability part, if you see the other parts also, net NPA and all these things, from 18.76 peak level, it has come down to 3.55%. So basic parameters within the given relaxations, we will continue on growing, but provided that demand is there. But yes, we will be managing the risk appropriately. So I will repeat that there is no risk averseness, but
thank you.
The risk management is there.
Thank you, Rakesh. It's so refreshing to hear that somebody is contradicting RBI, saying, no, we are not risk averse. That's why I call IDBI litigan. It's a big animal, 3.5 quintal plus. So let's hear Amitabh from private sector. Tell me, what's your take on risk aversion? Are you giving loans, or what are you doing with the money? Shall you on mute, Amitabh?
My apologies. I heard the governor use the word extreme risk aversion.
Yes,
did not say risk aversion. So I think we have said on multiple occasions in the past that as far as Axis Bank is concerned, we are quite comfortable with adopting a conservative strategy towards growth. But the important point to note is that we are talking of growth. And actually, if you look at our first quarter numbers, we showed more than decent growth during that particular quarter.
What kind of credit growth you are looking at? I think that's not a classified information. You can tell us the guidance.
No, that is not classified. Our overall growth in loans was to the extent upwards of 16%. Now, obviously, it is a comparison to the same period last year. And yes, the credit growth overall in the economy has come down. Yes, all of us have tightened our standards, and you might see this growth tapering off a little bit for the industry. I'm not commenting on what will happen with Axis Bank. But we are out there lending to the right customers all the time, and actually we are quite hungry for business, and we are trying to win business from the right kind of corporates and individuals. When people are saying that we are not lending, it is to the individuals or corporates who are already quite vulnerable, and the COVID crisis has pushed them either to the edge, and then you have to ask the question whether you're throwing good money after bad, or why would those individuals need money at this point in time? What are you going to really use the money for when a lot of the economy is actually shut? So you have to be careful. I think every bank is being careful. All of us have gone through quite tumultuous times as far as our overall credit performance is concerned. And it is very, very important that we be conservative, we be careful, because ultimately it is shareholders' money. We have just raised 10,000 crores. We raised 12,000 crores in September of last year. It's 22,000 crores over a period of 12 months. I think we are answerable to our shareholders and to the RBI. And so, yes, we want to grow. Finally, if we don't grow, we'll not be able to provide the returns which the shareholders are expecting from us. But it has to be in a very calibrated, conservative risk management approach. And I think that's what everyone is adopting in their own ways. And that's what I think you will see going forward. So if you really expect the economy to come back and people to start spending money and the banking system to start lending, I think you need to see more capital, you need to see more spending by the government. And so if Indian promoters or individuals want us to lend them money, we would like them to put some of their money upfront also. And only
Okay.
then we're in a position to give them more money.
So skin in the game, right? I mean,
Absolutely.
essentially, many of the Indian promoters have been substituting equity with debt. So you don't want that to continue, and that's what we got into this big problem of NPL. Ashu, your risk aversion, extreme risk aversion. What governor says?
I I don't think there is any extreme risk aversion. I think one thing I'll say, Tamal, is that I think we've been very focused in terms of the segments within which, so we have a pretty disciplined target market. And therefore, I must say the recalibration for us has probably not needed to be as dramatic. For example, we were never very big on construction and real estate side of the business, which has been obviously under a bit of stress for a while. I think we continue to support our clients. I think, to me, I don't think the issue is risk aversion. Obviously, if there is some sector which is under a lot of stress, we will relook at what our exposure is. I think for us, the principal challenge continues to remain the lack of demand. I think both on the working capital side, which is obviously linked with the activity levels, which we heard were 70, 75% or thereabouts. And as they pick up, that demand should hopefully come up. And the second is the capex element, which I think is the one which probably on the private sector side specifically is very muted right now. Having said that, we try and work around niches where we can add value to our clients. So we've been doing a lot of work around co-lending, for example, with some of the external export agencies, whether it's from Japan or Korea or UK, to co-lend with those agencies to give funding to our clients. We've been doing sponsor financings in some of the cases. So I think it's all very bespoke, but I think certainly for all the clients where we operate in, I think we are business as usual, calibrated for the fact that there is uncertainty, and we must therefore impose the appropriate credit discipline. But there is no pens down. There is no pens down in business.
Thanks, Rajkiran sir. Risk aversion. I'm sure you are, apart from lending to MSMEs or rather giving top-up loans, you're also busy on the consolidation, putting this, even though it's officially over, but there's a lot of back office work. So do you get time to lend, or you are using that as an excuse not to lend, or what? Give us a sense. Rajkiran sir.
Yeah, we do lend. Actually, somehow, see, during difficult times, bankers are a bit prudent in lending. Because, see, like today, if I'm not careful in lending, 3 years down the line, you'll be again interviewing me with a huge NPA bag and saying that, okay, didn't you have any sense when you lent the money 3 years back? So I think I have to be very, see, both the sides we need to answer. So it is not that it is a risk aversion, it is more of a prudence. Then I will again go back to what Mr. Kula said, is where is the demand in the system? So actually, even the working capital limits utilization levels you see, it has gone down substantially. So see, people are looking at the credit growth in the system and drawing conclusions that banks are not lending. But if you see the number of sanctions which we track, number of sanctions have not gone down. It is the utilization levels which have gone down. So which shows, because actually it is outstanding credit which is being monitored, which shows a lower growth. So it is because of the lower utilization of limits. Then other thing is the new investment credit which should come in. Actually, we are one of the major lenders for infra. Now, actually, there is no good infra project which has come up and which has gone out without tie-up. So we are able to do the financial tie-up for all good infra projects which are coming in. So, I don't know why this feeling that we are risk averse, because last 1 year itself, a lot of road projects and city gas distribution projects came up, and all the projects are tied up, and they're tied up in a good way within a month. So that means the banks are eager to lend for good projects where there is a sufficient certainty of cash flows, and the opposite party, counterparty, where we get a confidence that this customer, if he's a construction company, he is competent enough and sufficient capital with him to complete the project. So when we get that confidence, we do lend. So somehow I think maybe you can't blame us for this. It is basically overall ecosystem, I think, has to be blamed. So rather than only pointing a finger at banker and saying that you are risk averse. So it is more
Thank
of
you.
prudence. But if there are good projects, we are ready to lend. And I am again assuring you, if there is any good project, like even today, banks are ready to lend.
Thank you, Rajkiran Saab. All the bankers, RBI is watching and listening to you. So it's so refreshing that you are speaking your mind. Vaidya, on the same issue.
Same issue. My short answer is as follows. 4 months ago, when we were
A bit louder, sir.
when 3 months ago we were trying to estimate the impact of COVID, we actually felt this is going to be a washout year, which book is not going to grow. In fact, in the annual report, I wrote a note to shareholders saying that we expect a flat year. But suddenly, the last 2 months, after we've seen the May, June, July numbers, our estimate, if we are one sample in the process, is that now what was estimated as zero growth for the year will probably be 15% growth for the year. So if that gives you a sense as one bank as a sample. So, and the reason why it could be coming is also because not that existing customers are taking more money, that economy is still affected, and it's not that MSMEs are borrowing more. That's not true. There is also an untapped market in India on the consumption side, which was always underpenetrated, but now getting served. So if you put, that's an important variable put together, I think a 10 to 15% growth on the retail side is very much on the cards for us.
Oh,
it's an
that's
upgrade.
amazing.
It's an
That's a
upgrade.
great,
It's an upgrade of our own guidance than before.
Oh, that's a great story. Mallikarjun Saab, last word is yours. How risk averse you are? Are you risk averse or are you prudent?
See, with due respects to the assessment of Reserve Bank of India and also the government probably on what they say is there is a risk aversion in among the bankers, I would like to give my viewpoint in two ways. One is I'm driven to think that probably an empirical evidence of credit growth, what has been there in the couple of years, and the perception which gathered from the industry are the determining factors for the RBI and the government of India to think that there is a risk aversion. Now, let us take only a couple of important points in our discussion. AQR started in the 2014 December asset quality review by Reserve Bank of India, which has driven all the banks to review their risk assessment standards and also the credit underwriting standards. It was required to be re-evaluated properly to see that the underwriting standards are put in a much better way. Second tranche of November or October 2017 onwards, we have seen many banks being brought under PCR. As high as 11 banks were under PCR by 2018, which indicated that these banks were not able to lend into the market. So which created some element of flux or impasse in the banking system where the credit delivery was not happening. The third dimension is in the last 1.5 years through IBC, 4 lakh crore of debt has been settled. Even though the received amount was roughly around 1.86 lakh crore, the 4 lakh crore has gone out of the system. Thereby, in the outstanding basis, when the credit growth is assessed, this 4 lakh is never seen. If it had been restated, the percentage of growth would have been differently understood. So these are the summarical reasons which probably, on looking at an empirical value of credit growth and also the perception from the industry, appears for their understanding at RBI and government level that there is a what you call risk aversion. But I would like to categorically say that there is no risk aversion. The only point is there are requirement of standards to be properly worked out in terms of credit underwriting. Second factor regarding demand, what has been spoken by my colleagues, the government has come out with tax reforms in October, effective from 1st of October 2019. Since then, we have not seen much of an investment, though COVID has complicated that matter. It clearly indicates that there is also a requirement of a demand. The kind of lending what we are doing to retail and MSME, even if aggressively done, in a critical mass of the economy to compute the credit growth, they may not be able to contribute.
Thanks.
That is not visible.
Thanks, Mallikarjun Saab. I think all of you are on the same page. We have many questions, but before that, a quick few things, and everybody does not need to answer the same thing. One is I would ask Vaidya and Amitabh sir, maybe a minute each, the RBI's discussion paper on governance. So prima facie, what we see is this: basically the CEO and MD. I'm not getting into the the period 10 years, 15 years, how many years you will be in the chair. I'm not getting into that. But overall, the governance structure, we find that, correct me if I'm wrong, and I want, because it's a discussion paper, they want their views, a quick view, each of you, because others are not relevant for this question. Is this, it looks like CEOs will have all the responsibility but no power, and the board will have all the powers with no responsibility. That's the kind of thing we get a sense. Vaidya, I hear you nodding. So you first say, and then Amitabh. Whatever you want to say on the RBI. Let RBI take it as your point of view in the discussion.
No, thanks so much. No problem answering that. See, the under that, first of all, I do think that the governance standards in the banking system, Indian banking system, should improve, because we've seen many problems in the past, and I think it's a learning process, and therefore it should improve. Therefore, it's good that RBI is coming out with some good quality governance processes. The angle here to consider is that if individual reporting structures of the respective unit heads were to go to the independent director and not through the MD and CEO, then where does the accountability lie of a problem? For example, if there is a KYC lapse or a AML lapse, are you going to call the MD and CEO and say, are you responsible? Or are you going to call the concerned independent director? So if this particular issue is resolved as to where does the responsibility lie, and then I think it will solve a lot of problems. And therefore, the good thing is that RBI, like the governor said right now, it puts out a proposal, but then it carefully considers the opinion. I would think that they'll also think about it and come to an appropriate solution.
Okay, Amitabh sir, your opinion. You're on mute.
My apologies. As the governor rightly pointed out, they have come out with a discussion paper and they have received a lot of suggestions on various parts of the overall proposal they have put out. One of the elements I think Veti referred to in terms of a bit of a dissonance on some positions reporting to independent committees, while the CEO is supposed to continue to lead the bank. There are other suggestions also which have been given on various parts of that particular document. As the governor, himself said, that they will look at each and every proposal and deliberate on it and come out finally with the norms which they expect the banks to follow. A lot of it is being driven by the behavior or some of the things they've seen in the past. So we stand today where we stand because of the history. And I think they're trying to learn from that history and correct things for the future. So we have only ourselves to blame to some extent for some of the provisions which we don't like. But I'm sure the Reserve Bank will look at.
What are the provisions you don't like, Amitabh?
I mean, they cut across. Okay. Different banks have problems with different parts of the proposal. I don't want to comment on it. I think whatever we have to comment on, through IBA, they have been given to RBI. It will be very unfair to start talking about it.
Okay, fair enough. Ashu, you want to add anything on that?
Yeah, I think, like Amitabh said, I think the good thing is that there was a consultation process in a very formal manner. So I think the issues and the feedback, I think, which has gone back through IBA has been different for public sector banks, private sector banks, and foreign banks. And I think we've kind of given our input. But for us, the primary thing is most foreign banks, as you know, operate on a branch basis in India. And therefore, the concept of having a local board doesn't really apply because our board is really our global board. So I think it's largely things emanating around that. But the issues for all three categories are different. And as Amitabh said, I think through IBA, we have gone back and given our suggestions as they had asked for.
Okay. I'll ask the public sector banks now. Give us a sense. We'll start with maybe Raj Kiran, and then others can join. Is this, I'm talking from the saving communities angle. India does not have a social security system with a large segment of pensioners and all. And the interest rates on deposits are going down, down, down. Many of the banks are now offering on 2.5, 2.75 or saving banks, and fixed deposits are 5.5% and all. So where do the savers go? I mean, what is your suggestion? Will it continue to go down? And that might be pushing people into stock market. I'm not getting into the value judgment whether it's good or bad, but what is the message for the saving community? I walked in a bank branch the other day. Typically, all the branches display the big thing, how much they are offering. I found it is hidden somewhere in the corner. So I asked the branch manager, how much you're offering. So you really need a microscope to find out where is it and what is it written over there. Then I find out some 2.5 for savings bank, 3.5 for 1 year deposits, FD, so on and so forth. So if I am asking you as a saver, can you give us a sense? I mean, where do I stand? Rajkiran sir?
I just hope that it is a temporary phase because we are a high inflation country. So the real interest rates will count. So all said and done, see, we are back to a slightly higher inflation now. So now the real interest rates are negative, in the negative territory.
Yes.
So this should correct actually. So I think that this will be short-term phenomenon. Unless our inflation comes down to 2%, 3% level, this kind of deposit rates will not attract savers. So I think like this will correct itself over a period of time. Now, right now, it is a correction phase because there is a rate cut going on. I have to cut my rate on the lending side. So naturally, I have to cut on the deposit side, and we are all sitting on surplus today. Now, look at the money which is on reverse repo. So lakhs of crores are deposited with RBI at 3.35% interest rate. I give you 5% on deposit, and same day I go and deposit at 3.35. It doesn't make business sense actually. So I need to cut deposit rates. So but then I sincerely hope that this is a short-term phenomena. We will definitely reward the savers as the things stabilize, as the inflation stabilizes, and as the lending rates stabilize.
Mallikarjun Saab, so as a saver, do I live in hope? Because across maturities, including FD, all are negative interest rate. I know you have a negative carry because you are putting in money on RBI window at minus. But as a saver, what is my future? I mean, money, how much it can earn with you? Or should I divert it to stock market?
No. I don't think you should dive into stock market. One is that I will say one thing. It is a tricky situation. Now, why it is a tricky situation? I would like to say, as an emerging economy, we need a greater contribution from the savers. So, savings is one of the contributory factors in the country for generating the source for the capital investment. And interest rates being influenced by only assets and liabilities at a point of time cannot be only the situation to drive the economy. Ours is not a consumption economy in our country. Ours is a different economy. As such, savings rates, if they go below, in fact, below 3% in savings itself is an alarming situation. 2.5 being offered because banks are driven to offer that kind of rate because of the situation in asset liability match, but it is not a sustainable phenomena for a country like ours. I only wish that the things would improve in a better manner. Like Mr. Rajkiran Rai said, inflation also drives away the real value of the investment what the people do. So the better proposition will always be not the interest rates currently at this point of time prevalent. It will be little higher. It should be little higher than that. That would be better for the savers in the country.
Rakesh ji, you want to add? कुछ add करना चाहते हैं आप sir?
Yeah, just I will like to add that basically the deposit rates and lending rates, these are interrelated. Now it depends on the inflation. Now, so far about 4 or 5 months back when the inflation was low, the real interest rates were quite positive. But of course, recently due to various reasons, when the inflation has gone up beyond that RBI stipulated 4%, now it has almost crossed 6%. So the real interest rates have become low. So again, when this inflation comes down, so certainly I think there will be positive movement in interest rates, or they will start earning, positive real interest. So basically, it's like market mechanism how it works. But ultimately, you have to strike a balance between the lending rate and the deposit rates. So bankers have to go by that. But your one question was there: should you go to the market? That of course, your fund managers will advise you that certain part, in any case, you have to diverse the risk. Some part has to be kept where some part has to be kept. So that's a different mechanism. But certainly it's a market mechanism.
Thank you, sir. So the audience, you have heard that whether bankers are saying that the semi-normalcy or a semblance of normalcy will return in the industrial scenario by third quarter or latest by fourth quarter. They are not committing on their deposit rates as yet. They said no, things will, let's live in hope. Many questions are coming. First question, probably I would like probably Vaidya is the right person to answer. Do you see that gold loan is becoming a big product for the banking system now? Veda?
100%. I think it's a very big growth area. There are two reasons. One is, of course, gold is gold and gives security, liquid security to the lender, a lot of peace of mind. And the demand is already always at the bottom of the pyramid because people want to pledge gold and take it overnight. So I think it's a big market. We launched our gold loan program very recently, and we hope to do well on that. So I think for the industry, even for NBFCs, banks, everybody will do well in gold loans.
Okay. Amitabh, a very interesting question. Do you think that COVID will be the moment of truth for the Indian banking system? I'm just rephrasing it. That's not the way it's written. Essentially, from branch banking, we'll get into internet and digital world. It's a big booster for digital world. And banking, the physical part of banking will never be the same again. Is it the right observation?
I think if the institutions use this crisis well and obviously invest in the right kind of platforms and also spend resources in educating the customers, it could be a huge game changer, not only for the customers, but also for all the employees who work in the financial industry overall. Uh, I think the size and the format of branches will undergo a change. I think not only that, the branches which are mainly a service center now could over a period of time become more sales centers. But I also believe that the Indian customer expects some kind of physical presence. They would like the bank concerned to actually make an investment in having a physical presence in the community they live in. So on one side, the expectation might not go away, but the size format will change. And obviously, if you can invest in technology, educate the customers, you can completely change the face of how you interact with the customer, how you service them, how you originate loans. I mean, the entire gamut of all the services which you provide to the customer could change. And so
Okay.
you become more productive over a period of time. And that's what I think some of us are trying to do.
There's one question which all of you can answer, or whoever wants to this thing and all. Is the Indian banking system making sufficient provision for COVID related issues? Who wants to take? Mallikarjun sir?
Yeah, definitely it is making sufficient provision. And particularly once the RBI came out with 6th August communication related to restructuring, the clarity has come in terms of the provision requirement. Even without COVID, many of if you have seen the RBI financial stability report, the provision coverage ratio in the last 2 years has improved very high on NPAs. Now, additional provisioning required in terms of the COVID, the clarity has come in terms of the RBI circular. It is visible for us as to how the provisioning is required to be done in terms of restructuring accounts. Already, if you have seen the balance sheet declared by many of the banks by June, you must have observed that a lot of provision has been done by all the banks with respect to COVID. Banks are gearing up. I am sure it is sufficient for them to take care of that.
Anybody wants to add on the COVID provision?
Yeah.
Rajkiran sir?
Yeah. See, actually, first of all, there is a lot of uncertainty around COVID and required provisions. So where the banks have gone ahead and made different levels of provision, it is not true that we have not made provisions. We have made provisions, but there is a lot of uncertainty around what is the provision required. That's the first thing. Second is actually the existing pool of NPAs, which went up to 12-13 lakh crores at a point of time. The banks have covered up to 80% on an average now. So the existing pool of NPAs are well covered. Now, as the resolution happens, so when the NCLT again becomes active and all that, there will be right back also coming. And every time when we project the provision requirement, we forget that the public sector bank itself sits on an operating profit of 1.5 lakh crore plus. Now, generally what is happening is these operating profits are generally going for provisioning. So last 3-4 years, it's not only the capital, it is all the operating profits of public sector banks which have gone for provision. So I think we have sufficient cushion by of operating profits for a normal level of provisioning what is required. If it crosses a certain level, maybe like a capital raising may be required for the provision. So I feel that at this point of time, we are sufficiently covered. Existing pool of NPAs are well covered. We are prepared for some kind of hit which can come from COVID. If it crosses a particular point, maybe we may have to relook.
Well, one question I want one of you from public sector and one from private sector to answer. It's a slightly tricky question. It says that the 3 trillion government guaranteed top-up loan on MSMEs, while public sector banks are being forced to give it, given a choice, they would not like to probably be as aggressive as they are. And on the other hand, the private bankers are pretty reluctant. They are not as forthcoming as they should be. So one public and one private, whoever also.
Okay, I'll go first.
Yeah,
it's
you are not forthcoming to help them. That's what is alleging.
No problem. That's why I'm going first.
Amitabh is smiling. He's saying, "Okay, good that Vaidya is taking it." Yeah.
No,
Yeah, Vaidya.
yeah, I think it's an easy one to answer because I think we need to clarify here. First thing, to give you a straight answer, it's the government has held reviews on implementing this package for SMEs. They are reviewing it with private sector also. So every once in a while, there's a call from the ministry. All private sector banks are on the table. They ask every one of them, how much have you disbursed? So I want to put that. Number two, I'd say that there is no reluctance at all. In fact, where will you get the opportunity of lending at 9.25% risk-free, guaranteed by the government, when credit growth is not growing? It's wonderful. Home loans are going at 7.5% and 8%, and you're giving money at 9.25% risk-free. So therefore, we love it. Number three, we also believe it's fantastic for the SME because money is oxygen. So if we keep our MSMEs alive by giving them this money, it's very good for us because they will pay back our loans. And it's good for the economy because they will survive. And we want all of us want our SMEs to do well. So I have given you three good reasons why we want it. It's for returns, it's for oxygen, it's good for the economy.
Okay.
And we are fully after it. We want to do it. In our case, let me put out some number for you if that helps you. We have disbursed 1,250 crores, 1,400 crores of this money to the market against our target, our estimated target of about maybe about 2,400 or 2,400 crores.
So we that. Amitabh, you want to add anything?
Yeah, just adding one line to what Veti said. That yes, obviously, I think the public sector banks were quick on the take.
Yeah.
The public sector banks were quick on the take, and I think the private banks are slightly slower. I think it is partly due to the fact that the expectation of RBI is that we do a proper analysis and understand, whether this money, what will be used for, and whether they really need this money or not. I fully appreciate that there is guaranteed, but I think the onus is on us to ensure that we do tick all the right boxes for give the money. I think now the numbers are picked up and everyone is out there supporting the MSME sector in whichever way they can. So it's no longer such a big issue though.
Thank you. I think there's a catch in the guarantee. I think 75% of the money you get, but the rest 25% it may take years. That could be an inhibiting factor. Anybody, Rajkiran sir, or anybody who wants to add a little bit, that are you doing it with love and affection or being forced to?
No, actually,
whoever wants to pick up. Rajkiran sir, quickly. Huh?
Yeah, Vaidya has put it very rightly. This is a beautiful product, and actually there is no reluctance from bankers to lend on this product. It is fully 75% guarantee is good enough actually, and then the interest rates are also attractive enough. And then see, the best thing here is MSME, which is under stress. Actually, this kind of money is oxygen to them, particularly during the difficult times. It saves my own account where I have lent few crores, this 20% money which is fully guaranteed, which is like oxygen to that account. I think we should not shy away. And I'll just add a point. As of yesterday, public sector, like a private sector bank have beaten public sector bank on the quantum. Actually, they have more now. So number of account wise, yes, we have done more. But if you look at the amount, now the private sector is more than public sector.
Thank you. Last question. There are many questions. I'll just take one question and one person could answer. Whoever, maybe Mallikarjun, maybe IDBI, whoever wants, is this basically, are you staring at treasury loss? Because typically treasury is a currency which helps you to make money and to take care of your bad assets. I mean, the provision when you gets eroded. But it looks like this quarter you are going to, because of the bond yield, and you have huge bond holding, particularly in the public sector banks. So are you scared of a treasury loss? Any of you? Quick, 1 minute, less than a minute.
I'm Mallikarjun here. I don't think at this point of time, because first quarter has been very good.
Yeah. Yes, sir. Acha, I think there is some connectivity issue. In that case, yeah, IDBI.
I'll tell you. That, actually, as Mr. Mallikarjun was telling, that first quarter was really very good. First quarter was really very good, and we made good profit. But now also the rates, like as the Honorable Governor was telling, the rates have gone up slightly. Not that much, lot of difference has been made. So by let's see by 30th September how it moves. But already M2M provision, which normally affects the profitability of the bank, that M2M provision already we are, I think, at that stage that even if slightly it goes up, also it is under protection. So I don't think we are going to make treasury loss. So at least September quarter will be good. Let's see December quarter how it turns out to
Okay,
be.
sir. Last question. I just want one line answer. I'll start reverse from Vaida. RBI have first, you are given moratorium, and then what entire banking industry was looking for, restructuring. Of course, with a lot of caveats, and governor himself has said that this restructuring is actually allowing you to extend the moratorium judiciously, whoever you want. Is there anything else that you want from Reserve Bank of India at this point of time because of the context of COVID? Starting with Vaidya. Just one line so that we want to end it at 12:30.
Yes.
Vaidya?
No, I have to be honest here. The RBI is genuinely listening. And whenever there's a problem, you can call them up and say that we would like this or we'd like that, and they'll hear you, they'll give an opinion. So really, I don't have anything to really say of RBI, I want this today. Honestly, I don't have it.
Okay. Ashu, anything that you are looking from RBI? Any
No, I
wish
think,
RBI?
no, to be candid, Tamal, I think RBI has been a real star, I think, through this crisis in terms of all the measures they've taken very proactively. So frankly, no, there is no incremental ask.
Rajkiran sir?
I think maybe if there is one thing we can ask is the capital requirements, the Basel III requirements. So we would like a regulator to postpone a bit because there is a huge capital requirement coming in. That will help us.
Okay. Okay. IDBI, Rakesh sir, anything from RBI?
I think they have been, both Government of India and RBI have been quite proactive, and they have taken, in advance, steps in advance. So we are quite happy that the way.
Amazing to hear banking industry. Everybody is so happy. There's nothing to ask for. Mallikarjun sir. Mallikarjun sir. I think again we lost him. There is some problem. So Amitabh sir, you started.
It was a requirement for restructuring by the bankers. RBI has come out with it. It is very good. Hello.
Yes, tell us.
Hello.
Yes,
Yeah, it is good that we got the restructuring window opened by Reserve Bank of India, which was wanted by all of us bankers. Second one is we avoid the confidence which felt by. Are you getting my voice?
Yes. Carry on.
Hello.
Yes.
Hello.
Yes.
Hello.
Yes, Mr. Mallikarjun, complete the sentence.
You are getting my voice?
Yes, yes,
right.
Complete the sentence.
We are happy that RBI has opened the window of restructuring. Yeah. Right now, we only avoid the Comet Committee recommendations for taking it forward.
Okay. Amitabh Chaudhary, Axis Bank, you have the last word.
Hello.
I would second in what everyone has said, that I think RBI is doing an incredible job. They are responding to a crisis which is unfolding. They have done it extremely well. Obviously, we always can ask for more, and I think whatever we want to ask, we are going to RBI and they're listening to us, and I'm sure over a period of time they will positively reciprocate what we want. So generally, very, very happy.
So thank you, Amitabh, Ashu, Mallikarjun, Rajkiran, Rakesh, and Vaidya. I think it's quite an interesting discussion. We could have gone on and on. There are many, many questions, but we are just waiting for the last thing to start at 12:30. We stuck to time. What are the key takeaways? Takeaways are, yes, there have been. It's a troubled time, but you are fighting it out, and you are seeing the proverbial light at the end of the tunnel, probably in third or fourth quarter. Nothing to be worried about. You are not worried about the fragility of the balance sheet. You are saying that you have done enough provisionings. You are strong enough, resilient enough. You can take it forward. You are saying that you are not risk averse. You are being prudent. There is not much of credit demand as such. And finally, you are extremely happy the way Reserve Bank of India is handling the situation. You have nothing much to ask for. Only one, Rajkiran sir said that the Basel norm on capital, it can be little relaxed. So RBI should feel happy. Of course, you have picked a little fight with RBI's observation on your risk averseness. You have said, no, you are not at all risk averse. You are being prudent. So, and that's what we all want, prudent bankers and resilient banking system. So happy to have all of you here, and thank you for being with this Business Standard Roundtable. Thank you, sir. Thank you.
Thank you so much.
Thank you very much.
Thank you, Tamal. You did a great job. Thank you.
Yeah. So we're just waiting for the last round with two biggest bankers in India in terms of assets and in terms of market cap, Mr. Puri and Rajneesh Kumar. I think Manish, should we start straight away or give us a cue? I think that they need to.
He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming